So, it's that time again for yet another stock review. This time it's on KLA. Okay, so we'll do it like normal. We'll start off with having a look at the company and what it does. Then we'll go on Simply Wall Street and look how it's broken down. From there it's then on to Trillion212 to look at the fundamentals. And then it's the conclusion. All parts will be timestamped down below so you can skip to whatever part you need or rewatch certain parts just there for your convenience. And with that out of the way, let's get straight to it. Okay, so KLA is a technology and electrics king, and are well placed, contributing heavily to a variety of electrical based industries, from computers, laptops, screens, phones, automotive, VR, cloud, space exploration, robotics and AI. So of all them industries, do you think this company will succeed? Like I've said many times before on this channel, the electronic industry is always growing. The consumer demand, the more complex technologies that come along, more is needed. More production, better products, and the cycle continues. More. If you want the word-to-word breakdown from the company itself, this is how it describes what it does. So you can pause and read this if you want. I just summarize it into simpler terms. Okay, so now we have a basic understanding of what this company is involved in. We can then go to Simply Wall Street and analyze how this company is broken down. Okay, so now we're on Simply Wall Street, my favorite stock analysis tool. Got KLA here. The ticker symbol is KLAC, KLA Corporation. The market cap is 62.3 billion. We're up 2.5%, 7 days, and 59.4% on the year. Very nice. Last updated 12th of December 2021, so nice and up to date. And we have 19 analysts on this data, so quite well covered. So you can see the quick breakdown. It has no risk detected, which is excellent. We have rewards and we have the snowflake breakdown, but we'll go into each of these individually in more detail. So I'll give you some of the compares, but we're not interested in that today. So I'll put it to the max view so you can see all the way back to 1990. Very nice. Very old established company, so sort of just trade along, not really grow too much. Had a nice peak in 2000 and then dropped back down a bit, traded again sideways, and then it was in like 2018 that it started to run up a bit. Then you had that dip and then it just sort of skyrocketed ever since, so we love to see that. Having a look at the recent news and updates on a company can help you when analysing. So this first one here, KLA Corporation, top semiconductor equipment manufacturers in 2021 with 42.6% year-on-year growth. Very bullish point for them. Got price target increase, another bullish point. Sentiment improved, again, good. And then you can keep reading these, but we won't go into them all now, otherwise this video will be really long. So shareholder returns, you can break this down. So if I click this, I can see all, include the dividends. So you got 7 day 2.5%, 30 day was -6 or minus 0.6, sorry. 90 day 15.5, 1 year you got 61.3% with dividends. 5 year 483.4%. So it's got some pretty good growth in this in returns. Doing better than the industry, and it's done better than the market. So what more could you ask for? Alright, so coming down to the valuation segment, surprisingly this company is actually undervalued, which is quite remarkable for how good it is. You'd think this company would be bought up a lot by investors, however it is current price of $410, fair value calculated at nearly $500, so 16.5% undervalued. So if you can pick it up now, be a good time to buy. You got price to earnings ratio, the price to earnings versus industry. You got the company being the darker blue, the industry being the lighter blue, and you can see the industry is doing better. No, the company's doing better than the industry, which is another plus for this company. The pricing to earnings growth ratio is calculated to be poor, however, so there's PEG ratio of 24.8x. That's just something to keep in mind there. And the same story here with price to book. You got the company being here and then the industry being over here, so that's another negative sign for this company. Okay, so coming down to the future growth segment, the analysts do have a pretty bad expectation, or the ones that at least did this. Again, like I said, with future, obviously you want to try and predict where it's going to go, but evidently you can't. You can only base it on the past. So again, it's important to take note of these numbers and whatnot, but it doesn't always mean that the company is going to do what analysts predict it's going to do. It's predicted to be 0.9% forecast annual earnings growth. You got the chart down here. I've turned all the figures on, and you've got all of it coming down here now. So things are predicted to go up, just sort of slowly, and then from 2022 onwards it's predicted to sort of like plateau a bit. But obviously you can only really sort of accurately predict the next year. If you go too far in the future, it doesn't work. The numbers get less and less accurate. And again, when you're doing your analysis, you always want to be conservative. So again, when doing analyst stuff, it's not always accurate because you have that safety factor built in. So the forecast of annual earnings growth and the revenue growth, the company is again lacking the industry and the market. But again, like I always said, the market's not too much of a concern. I just like doing it against the industry, unless it's an overall market thing like the situation we've had this year where everything dips. So then you would want to have a look at that. Back to some more positive news. The future return on equity is supposed to be very high in 3 years time, 47% versus the industry of 16.4%. Now this is past performance section. Now again, this is what people will use to try and predict the future, which again is strange given how good this past was. So, but again, past performance doesn't necessarily predict the future performance. The stock market is ever changing. You can never predict anything in it. So there's a 20.5% historical annual earnings growth, which is great. Got earnings and revenue history. You can turn the free cash flow, cash and operating expenses. So the revenue grew the most, with everything else sort of in line with each other, which is nice. Has high quality earnings, and current net profit margins of 36.5% are higher than last year's of 21.8%. When you see stuff like this, it is weird to see then analysts saying it's going to decline and do all that kind of thing. So you do have to make your own opinions up sometimes. Try out your own calculations as well. Past earnings growth, you've got 20.5% and the industry's at 15.4%. And then the last 1 year earnings growth, you've got a company at 111.2% versus an industry of 79.6%. So the industry did quite well, and the company, being in the industry, obviously did well as well. So just a good year all round for them. Possibly that is a reason for the future analysts, because obviously we've had major growth and it exceeds its 5-year average of what it was, so maybe they're thinking it can't sustain this, which would be accurate. However, that does not mean it's just going to crash and not do anything though, so it's more realistic it would go back to more this level and not stay at this level. So maybe that's what they was thinking when they did their analyst on this, because again, the industry itself is high up as well, so you got to take that into consideration as well. And again, we've got the return on equity, with the company being 70.6% where the industry was 16.4%. Return on assets and return on capital employed, again you can see the company of 25.8% and the industry of 10.5% for return on assets. And for return on capital employed, the last year the company was at 32.2% and 3 years ago it was at 37.4%. So it's hovering around this mark, which is good to see. Obviously it's just dipped on the return on capital employed a little bit. And now I move on to the financial health section. So we've got short-term and long-term. Short-term assets outweigh short-term liabilities, and they actually do outweigh the long-term liabilities as well. So that's a very great thing to see. The long-term assets just about outweigh the long-term liabilities, which is nice, and obviously outweigh the short-term liabilities, which is good to see. A nice healthy balance sheet. You got debt to equity history. So I've turned on the cash and equivalents as well, which is this green line. So you can see that the debt is just a bit higher, or was in 2020. However, coming to 2021 now, it's sort of met up now, and the equity is now higher. So if this is a continuing trend, it would be nice to see. The cash is also going up, so another positive sign there. The net debt to equity ratio of 21.2% is considered satisfactory. It has reduced its debt from 385.2% to 89.2% over the past 5 years, So obviously it did have quite a bad debt problem back then, and now its debt is well covered by operating cash flow of 73.7% as well. And again, the interest payments on its debt is well covered by its EBIT of 18.9x, which is also great to see. You can see here on its balance sheet it's got debt of 3.4 billion and cash and short-term investments of 2.6 billion. So it nearly has enough to pay off that. As we saw from the other section, it would be able to handle this by just selling some things and shuffling some things around. But again, we'll have a look at this in closer detail when it goes to Trading 212. This company does actually pay a dividend, not the highest dividend, it's 1.02%. So it's near the market bottom. You can come down to the stability and growth, so you can see that the dividend has been going up over time, and we had quite a big jump 2018 going up, and it seems to be on the upward trend still. We can look at the growth ratio in Trading 212 as well. So it has been stable in the past 10 years and has been increasing over the past 10 years, so good to see there. Current payout, we're at 21%, and the future payout is predicted to be 22% in 2024. So it can well cover that dividend. The last important thing to note on here is insider trading. So we have seen that someone sold quite a lot and then someone bought as well. You can actually go scroll down and see who did this. So we've got Gary Moore, and he is the independent director, member of the board of directors there, and he bought up the 11th of May, and there was 2 sales February from the same guy. So that's just something to make note of there. The ownership breakdown, most of it is institutions. The general public, that's me and you, own 12.4% of it. And you can see how things are broken down here. Shareholders have not been meaningfully diluted in the past 10 years or the past year, so that is good to see as well. Okay, so now it's on to Trading 212 to have a look at the fundamentals and all the analytical tools on there. Alright, so now we're on Trading 212. You can see the financial summary down here, just gives you a sort of overview of where the company's been going. So for the 3 months ended 30th September 2021, the revenue increased 35% to 2.08 billion. Net income increased from 420.6 million to 1.07 billion. That's a hell of an increase. Revenues reflect semiconductor process control segment increase of 40% to 1.78 billion. And it's just been increasing all around, so nice to see. So going into all ratios, there's a few things I want to show you here. So if we go to per share data, we can have a look at the free cash flow per share. We've got free cash flow per share of $11.07, and we have a dividend per share of $3.75. So it does pay out a large dividend per share. Obviously it's relative to the price, so you've got to bear that in mind. So it's nice to see it's got plenty of free cash flow to support its dividend and everything else. Going into management effectiveness, you've got return on assets, return on equity, and return on investment. So return on investment, we've got 5-year average of 22.25%. That'd be nice to see. And then return on investment trading 12 months, we've got 33.69. Also great to see. And coming into the growth section, you can see the dividend growth over 3 years have been 12.62%. So that's quite a nice growth to see there, and if that continues, obviously the dividend would then increase alongside you, which is awesome. Okay, so now we're in the income statement of KLA. We can go back to 2018. So total revenue in 2018 was 4.04 billion, 2019 4.57, 2020 5.81, and 2021 6.92. Gross profit, going back to 2018, 2.59, 2.7, 3.36, and 4.15. So everything's growing there nicely, which you love to see. Coming down to net income, 2018 you've got 802.27 million, 2019 you've got 1.18 billion, 2020 you've got 1.22 billion, and 2021 you've got 2.08 billion. So again, very nice growth there, quite explosive going along. And we can do this in the quarterly view as well. So quarter 1 total revenue 1.54 billion, quarter 2 1.65, and quarter 3 1.8. Gross profit, quarter 1 you've got 954.92 million, then you've got 981.14 million, and then you've got 1.09 billion. So again, nice growth all the way through this year. Coming down net income, got 420.57 million, 457.25 million, and then 567.5 million. So again, nice growth all around there. Okay, so we're in the balance sheet now. So we're in the annual view, go back to 2018. So we've got total current assets, 4.55 billion. The total assets were 5.64 billion. Total current liabilities was 1.21 billion. And the total liabilities, alright, cut that out, cut it all out. Alright, so we're on the balance sheet now of KLA. We can see back to 2018 in the annual view. So we've got total current assets, total current liabilities, and total liabilities and shareholder equity. So total current assets, we've got 4.55 billion. That outweighs the total current liabilities and the total liabilities and shareholder equity. So lovely to see there. Is it the same in 2019? 4.32 billion current assets and 1.77 billion there. Okay, so the total liabilities did outweigh the total current assets, but then the total assets did outweigh the total liabilities, so not too much of a problem. 2020, how does it look? We've got 4.72 billion in total current assets. That outweighed the total current liabilities. Did not outweigh the total liabilities, however, but the total assets again did. And 2021, you've got total current assets of 5.7 billion. Total current liabilities of 2.1 billion, so outweighed that a lot, and it was just shy of outweighing the total liabilities and shareholder equity here. However, the total assets did outweigh that by quite a lot though, so again, not too much of a problem there either. So all around a good balance sheet. Okay, so in conclusion, I really do like KLA. I think there's some really positive things going for it. There are a few little negatives, but again, mostly it was to do with the future analysis. But like I said, that is never promised. You can only go off the past, and what the past looks like is good. We did have like ridiculous growth though, so I think that is why people are sort of being a bit more conservative, being like, hold up, this can't last. However, like I also said, the electronics industry is ever growing, the consumer demand is there, future technologies need better, smaller chips, all of that, and just more. And this company will be able to produce that and keep up with the demand, I personally feel. The company is undervalued, has excellent fundamentals, the analysis looks good, I like what industry it's in, and that's really what I have to say about the company. Obviously, if you're going to choose to invest in it, you'd have to do deeper research. Don't just rely on one video and say, yep, that's good. I'm not a financial advisor, this should not be taken as financial advice. It's just me putting my opinion about a certain company. This is kind of a way for me to look at stocks, screen them to see if I want to do further research into them. So this would be one that I would want to do more research in, and it's one that I have done more research in, and that is why I personally hold it in my portfolio. So I hope you enjoyed and got some value out of this video. If you did, make sure to like, comment, subscribe, all that good stuff. Check out the link in the description, trading 212, get a free share worth all the way up to €100 when you use that link and deposit £1 on that platform. Who knows, you could get KLA. Check out all the other links in the description. You've got Blockfi and Gemini for your crypto needs, and I'll catch you in a bit. Peace out.